Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, September 14th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES has pulled back over the recent week plus from the recent strong high back down. I mentioned before that this looked like a pretty good, strong, decently strong low, but we just failed to get going the next day and instead fell back down. We are now inside a narrow 4 or 5 day range here that has been developing, or at least a trading range, not super narrow compared to what we'd seen before. This was very narrow. We got the expansion. But right now we're in a range here after the recent sell-off. And based off of current history, right, in the current market, every major rotation has been a buying opportunity still. You know, even if it pulls back, it goes, it pulls back and goes. Right now we've pulled back to this lower edge here. And the idea is we likely have another shot to go higher yet again. The key level that continues to be at play here this month is this previous month's low price right there. That's the important level there. And again, price continues to fail to hold above that zone. And if that's going to reject, again, we keep pointing to the lower level here as the previous month's low price that likely needs to be tested next. And that continues to be that 32.54s. So overall, this pink line right there is very important. If price can't get above or through that line, basically 3,400, then 3,400 may still open up a retest of the previous month's low. And at that point, we may see some sort of rejection that can bring us back up. But at the moment right now, after this recent swing pullback, there is the potential to do this yet again, but we haven't found a strong low just yet to be able to get us going back to the mid. So we may need another round of weakness here and a rejection at the previous month's low before we see that bounce opportunity. So right now, keep an eye on the previous month's midpoint, right around 33.90, 3,400, that zone. And if bears defend or keep that area offered here, we could be looking at a previous month's low ahead. All right, let's take a look now at the NQ. Here's the NQ. For the most part, the market, again, resembles the ES here. Very strong top, very clear pullback, but falling shy of the previous month's low price. That's very important yet again because we want to see if price can reach that low and find rejection, because we've had an impulse sell-off. And again, while we had a decently strong low this day, it just fell apart the day that followed. Failed new highs, brought prices back down, and now we're kind of stuck inside the middle of that range. So again, even if price were to push higher here, any failure back at this pink line, 11,500, could still provide an opportunity to go lower. At the moment, we still need to find a very strong low, and given the current failure to push higher, the failed new highs, now an inside day here developing, again, we could be looking at another push downward. Now if this thing were to push lower and take out the previous low here, we could be looking for some strong low, and maybe it happens around 10.4 or this LV in here. That could get us back up, and then we could have a larger key range heading into the election. So that's something to consider here as we continue to develop. Another thing to keep in mind is this week is the federal interest rate decision and the FOMC statement. So this Wednesday we get ourselves another FOMC key level, which is going to be very important. The last time we got an FOMC key level was right here. That was July 29th, and that level is 10.615. And what we usually say is if it goes bid, it continues to go bid until you find rejection. At that point, you tend to snap back to it. So 10.615 may still be below here for a retest up ahead. All right, let's take a look here at crude oil now. Now, crude is down about 1% right now, but really is still inside a narrow trading range that has played out here over the last few days. You can see on a 4-day range basis right now it is compressed, although today is not finished yet. It can get to this upper edge up here or this lower edge and still, you know, be compressed here. It has to really shoot through that area to open it up. But as of right now, it is compressed. We do have compression after 2 major sell-off days, kind of a rest after battle type of idea. And again, with the market having pulled back here, any push to the upside that fails, so say this price tries to get above 37, 38 rather, and fails, that could be a failed high that leads to a big push downward. I mentioned before when we gave up 40 here and we're starting to drop that we might need to go into 35s. 35s right there is a major LVN below, and that could provide an opportunity for a bounce, but we haven't quite gotten there yet. So you can see the LVN right here in the composite profile at 35. Perhaps we need to drop into that LVN, and perhaps that could provide a bounce back up toward 37.5 or 40. So right now, more downside could be ahead. We are clearly building energy in this 4-day range, and we'll look to see which way we go here pretty soon. But right now, very clear, bears have taken over here, and we could have more downside ahead. Lastly, taking a look here at gold futures, what you'll notice with gold is that gold has been compressed tremendously with higher highs, or higher lows rather, and lower highs, and that compression right there has all happened around the 1957 half, 1950 level. And I mentioned before, this is likely to take place until we see that day that we know the breakout has come. And once you see that day, you're likely going to see a couple of months of very, very aggressive trending price action in the direction of that break. Most of these have happened to the upside. For example, this was that day when we compressed. We had a big day there, and that's when I mentioned, hey, any pullback to 1750 opens it up, and boom. This was that day as well, out of this compression, and boom, you see that move. We haven't gotten that day just yet out of here, but we may get that day very soon. Again, with the way that this one is played out, after a big move, we've seen compression and a refueling of that energy, and then we've seen that day break out and lead to a transitionary phase into a trending market. So right now we are compressed. We have a pretty significant breakout happening right now in the intraday time frame. It could certainly turn into that day. For that to happen, I would say price really needs to break above 2,000 with some oomph, and that could really trigger a continuation at some point. Up until now, we've been trading between 1,900 and 2K, and that could continue to be the case for a while until we see that day. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.